Now market is doing a B. If it is a B, it's gonna be doing the C. You could bring that B here, we could bring that C here. Alright, so keep in mind that the market could do both. Both counts are correct. Really, the market will just use the counts to implement the fundamental feed that is driving the market. So if the fundamental feed is going to be bullish cryptocurrencies, then the market will just terminate that C here and move higher. If it's going to be bearish, you would expect then that you want to take measurements from level 2 all the way down to the market bottom, which is level 3 or even level 5, and that the market, after doing, we had an A here and a B and a C, okay, will run back down to 0.97 and 0.98. all right, and we have of course projections for this wave from top of 2 all the way down to the bottom of 5. You're looking at 0.98 and 0.97. So this means that we should not be concerned. We already know that we're going to be buying at these levels. We're going to be adding half size at these levels. Okay, so what could we do? What can we do in order to do the best of the volatility? We know that we have already bought at 1.033. Okay, so we said this earlier, the market should be moving higher now. Even if this was an A and a B and a C, we do projections right from beginning of level A, so we do projections a bit higher. Let's now use this. Now there's an A and a B, the market is going to be doing a C, so of course you do projections right from the top of level A here all the way down to the bottom of B, and you get where that C is going to terminate. And you have these levels 1.01, we have 0.98 again, and at the most 0.95. We're looking at 0.98. So we need now to use this negative volatility to our advantage. Okay, if we are already long at this dashed green line, we're long at 1.033, 1.04. We will consider there's going to be a correction into 1.05 and 1.06. We close out our longs. We close out our longs at 1.03 at a profit, because we're having negative momentum on the 1 hour. We could actually have a cycle extreme, no problem, and this could be the market bottom. So why close out now when there's a market bottom? We do what is the best for the account. If this is going to make money for the account, it's better than having a negative drawdown on the account. So on a bounce higher, maybe our entry is correct, but we'll take advantage, respect the market volatility to the letter. On the bounce out, even if it's just 2 cents money we're going to be making on that position, we make it. We close out, we wait for that correction again, and because of the negative momentum, we either enter at 0.97, 97.50, or that level here, or 0.9850, and add that to any other holdings that we have higher up on Ripple. I believe we could be long at 1.14. Okay, so we can now again decrease back our holdings. All right, and monitor. So if the market will still be moving lower, okay, we will take profits on these entries that we did at 0.9850 and 97.50 and add lower. We expect the market is not going to be moving lower than 0.97 because of the head and shoulder formation that we have on the 4-hour charts. So let's now take off these fibs and take a look at the pattern itself to understand what is going on and how bad this can be, or what is exactly happening. So we're having leading diagonal. Okay, now the worst is that we're going deeper into that leading diagonal. You want to extend the lines. Okay, so we rejected at the leading diagonal, top of the leading diagonal. That is the worst case scenario, that is. And we're going down to 0.9750, even a bit lower, 0.9550. Okay, we're prepared. That is the worst case scenario, and in that case, what are we actually saying is we're expecting a bounce at level 1 here. Okay, the next level 1 is actually over here, 0.9667. We already bounced there earlier. So the market actually, when we check the whole crypto class, whatever we say, when we check Ethereum, when we check Bitcoin, both appear to be going up. So we're just still doing a basing formation. So we'd expect this to be a basing formation. We're doing an alternation for this wedge here, showing on the 1 hour chart. We're now in the ending diagonal. Okay, so that is the worst case scenario, and Ripple we expect is good. There's a question if it's good to go on and hold. Yes, it is good, but we just want to make use of our entries the right way, so we take profit on these entries that are showing profit and are prepared to add at lower levels if we get to see these lower levels. So that was the worst case scenario. What about the good case scenario? The good case scenario is that we could actually, the market could do this any minute. Usually an ending diagonal is not the whole structure as we are drawing it. A leading diagonal, sorry, not an ending diagonal. It is just highs of level 2 and level 4. Forget about this level 5 up here. So you're looking at highs, you're joining the highs of level 2 and level 4 very diligently with the market close. When looking at market close, we need to join the right levels. Okay, so the right levels here, you're looking at the 1-2 here. This is level 2. You're looking here also at the 1-2. I would join the top outs of wave 2s. So I suppose I maybe have joined them correctly. Okay, but you can do it of course better. You will find that this line even moves lower, and this is very indicative because you have taken out that level. If you check this correctly, you don't have an extension. Remember, I'm joining low of, or the top of level 2 here and the top of level 2 here. I don't need to bother about top of level 5. Why? Because this is an A and a B, and now this is a C formation. Again, you can see 4A, you can see 4B. This is a 4C. It's very lengthy, but it is contained by an ending diagonal. The actual ending diagonal, for causes of simplicity, we use the whole plot, but the actual ending diagonal is this, what you are really looking for. The bottom outs here and the top outs, if you're going to break out, are very important. So the importance of the top out shows that actually what you're seeing is just flushing out of weak hands, people having very close stops. You have already broken out of the ending diagonal. There's a cycle extreme and you are out of these levels. Okay, so we're looking actually that this is on our own analysis, that this is a motive wave. There's a 1, 2, there's a 3, 4, there's a 5. This is an A and a B and a C. We are still inside of the motive structure. When this closes, you'll find that the candle close, yes, did drop below the motive structure, but it is still at a very important level, top of a level 1. We're out of that leading diagonal. There's no problem. We should be good, seriously. All right, we are just, the market is simply washing out stale longs. Stale longs are these longs that you have. Say I want to take profit on a daily basis or on a weekly basis. I have a long there that I'm supposed to close after 24 or 48 hours, and I'm not able to take profit, so I have a very close stop or some kind of a close stop close by, and I leave that position on for a week or more. The market will sense this. There are so many orders with stops, and they draw the market down. There are a lot of market dynamics that we have to consider. If there's nothing fundamental impacting the market, then it is something that has to do with order flow. Usually this is what would have to do with order flow. So we expect that this bounce is valid. We have of course done